Hi everyone, it is Thursday, October 10th. This is Lee McMahon here to do some quick Forex video analysis in conjunction with Mr. Topstep and Global FX Club. Thank you very much for watching. Going to run through exactly what's going on today with this massive rally in U.S. equities, talk about how currencies are reacting, and then talk about what we might see going into Friday and then next week. So, please take a moment to read the risk disclaimer, which should now be on your screen, and then we'll get started. Okay. Alright, so let's start with E-minis. Alright, S&P 500 futures. We had a very gorgeous breakdown that has been now sort of negated by this rally. This trend line actually extends back until November of last year. We broke down out of it. We'll see how the day closes. We still have about 3 hours of trading left as I record this. Alright, but you can see there's roughly the year-long trend line that we broke down, we closed below and all that, but we've since now bounced back higher. We couldn't really breach this 100-day EMA with any great conviction, but we did set up still some potential short setups here. We could see an exaggerated head and shoulders pattern, and again, we could even close below this trend line depending on how the rest of the day goes. But the significant rally, or up 1.8% right now on the S&P, sparked by increased optimism about the debt ceiling and budget crisis situation currently ongoing in the U.S. Today, both sides said, like, hey, we're going to start talking, and there's been rumors of a 6-week debt extension to be passed to give time to sort this out without breaching the debt ceiling, which is the great concern most markets have. Breach of the debt ceiling would mean a U.S. default, which would mean some significant volatility in the dollar, treasuries, equities, and global markets. So that's what we're looking to avoid, and that's what people are buying on optimism here, that's what we're going to get out of today. So we have this massive rally in U.S. equities. All right, we had a pretty sizable rally in Japanese equities as well. All right, the Nikkei gained about 1%. Yesterday, it's up about 2% here overnight. 15,000 remains a significant level to watch on the Nikkei. The Nikkei matters because it affects the dollar-yen. Dollar-yen had a good day today. All right, it's up 0.8%. All right, let's clear some of these lines here. All right, so the one thing that it looks like dollar-yen has done is we have perhaps started this breakout. All right. We obviously, again, haven't closed the day yet, but it does look like we're going to see a daily breakout here out of this ascending wedge. Major next resistance level is probably this level here. It's about 100. All right, corresponds nicely with the fact that 100 is a very significant level on this pair, as well as this descending trend line. We do have the 50-day EMA that we're trading just below right now, as well as this 100-day EMA in green that we're trading just at. So we do have some moving averages to pay attention to on dollar-yen, but it does look like we've started a breakout on dollar-yen. All right, a breakout on dollar-yen has helped. All right, the other yen pairs. This is Kiwi yen. Looks like it's starting to break out. CAD yen, it's starting to break out. Euro yen, it's starting to break out. You get the idea. All right, the yen pairs look fairly constructive here. Of course, some more bad news can send them quickly reversing, but for right now, all right, the yen pairs look very strong going into the close and into next week. Euro dollar and the other dollar pairs, we're going to go down to the 4-hour chart. Not super convincing today, all right? Keep in mind, all right, so euro dollar is up 0.03%. Which, is better than being down, but considering we have equities, we've got the Dow up over 200 points, you would want euro to be higher. All right, euro dollar still capped very well by this 50-period EMA here on the 4-hour chart. Kind of just consolidating here after this breakout. It still doesn't look particularly bullish to me. Pound dollar. All right, pound dollar is up a little bit today as well. But same thing, it's up 0.09%. Same thing, though, not that great considering. The one setup you want to keep your eye on here on pound dollar is an opportunity to short at the retest of this head and shoulders neckline and the 100 period EMA here on the 4-hour chart. It's about 160.50 or so, or 160.30 or so. So that's the level you want to keep your eye on. All right, possible move up followed by a strong move down towards about the 156 area. So keep your eye out for that. Kiwi dollar. All right, this is what Kiwi dollar is doing. We're down, actually. Kiwi dollar is down on the day despite the massive equity risk bid. 82.20 between and 83.40 or so is this larger range. We then broke this micro range that we had formed, but then we kind of broke into it. We retested this descending trend line here. It's a pretty consistent trend line considering the chop that we've had. I mean, this trend line has been tested pretty much perfectly once, twice, 3 times, 4 times, 5 times, 6 times, 7 times or so. All right, so it has held really well. So now the level that you need to keep your eye on is going to be this trend line here. All right, and then below this trend line, obviously the bottom of this range at about 82. Aussie dollar. All right, same thing. It's stuck. It's choppy. It's up slightly on the day after employment data that came out of Australia last night. That employment data was not good data, despite the fact that we saw the unemployment rate drop. All right, it dropped because of a move in the participation rate. That is not what you want to see. You want to see higher participation and a lower unemployment rate. So keep your eye on this trend line, and then obviously keep your eye on the range as well. Aussie is pretty choppy here, though. Pair that I like very much. Dollar Swedish krona. All right, we had a very nice breakout rally here. We're now retesting the bottom of this significant trend line, and unsurprisingly, it's held for a little bit. Any sort of sideways consolidation could be a nice buying opportunity for a breakout and then squeeze out the shorts, the stops above that descending trend line. So keep your eye out for that possibility as well. Dollar Swiss. I posted this chart on Twitter. Very perfect, picture perfect retest here. All right, off of this inverse head and shoulders. This is the measured move. It takes us to about 91.75. So we do still have some pretty decent room to the upside here on dollar Swiss. So watch that as well. Pound Aussie is in an interesting place here. All right, still trading near its range bottoms. Consolidating here, you could make an argument for some sort of flag-like continuation pattern. Not wholly convinced on that yet, but if we do manage to clear this bottom of the range, it would look great for shorts. But for right now, be very cautious on pound Aussie. If we do see the Aussie finally start to break down, we could see a very nice squeeze higher on pound Aussie. All right, so that's what I'm keeping my eye on here for this week and into the end of next week. As you can see from E-minis, all right, technicals are a little bit fuzzy right now. All right, this is a very unusual day to see this perfect breakdown followed by just a ridiculous squeeze higher. The resistance was not even resistance. All right, we cut right through it. So that means that you got to keep your eye on fundamentals. People hate fundamentals and don't like trading on them, and I see their point, but this is the time where you either need to keep a very careful eye on the news wires or stay flat. All right, because that's how markets are trading right now. Keep your eye on the meetings that are allegedly being held today and then over the weekend, and watch for clues that both the Republicans and Democrats are backing away from their we will not negotiate policies, because they're going to negotiate because they're politicians. And everyone, I think, realizes that a breach of the debt ceiling would be a disaster. So I do expect some negotiations. I do expect eventually this to be resolved before October 17th. How the market responds to that then is unclear. We'll have to see how that goes going forward. All right, so that's what you should keep your eye on for. Good luck trading the second half of this week. Enjoy your Friday, and I look forward to talking to you soon.